A very good morning to everyone and welcome back to another session of Economy and Financial News Analysis. So let us quickly get started with what important news we have in store for today. So the first news is regarding the national monetization pipeline, right? National monetization pipeline. And this national monetization pipeline, it started in the financial year 22 and its term is still financial year 25, and under this it wants to monetize various assets of the government. And what do we mean by monetization? It simply means converting an ideal asset to a revenue generating asset, okay? And through this national monetization pipeline, we were planning on monetizing assets worth 6 lakh crore rupees or 6 trillion, you could also say 6 trillion rupees worth of assets we were planning to monetize under this national monetization pipeline, which is managed under the Ministry of Finance. Okay, it is managed under the Ministry of Finance. Okay, and why this is in news? It is in news because the Ministry of Road Transport and Highways, it has done the highest contribution to this program of national monetization pipeline, and at the same time it is planning on raising up to 45,000 crore rupees in the financial year of 24, okay, and that is exactly why it is in news. And another thing also that you should remember is that in this national monetization pipeline, the assets are being transferred from the government to a private entity, okay, for the monetization purpose. But when this transfer is being done, only the rights are transferred, okay, the rights to generate revenue is being transferred and not the ownership. At the end of the term, they have to transfer the ownership to the government. Only the rights are transferred, okay, rights are transferred and not ownership. And another thing that you should also remember here is that monetization is done of brownfield assets. Okay, we have already discussed what are brownfield and what are greenfield assets. Brownfield assets, here the asset is already existing. So we are going to work upon this already existing asset, and by a greenfield asset we understand that the project is going to start from scratch, but here the asset is already existing and we are going to work upon it, okay? And the main thing that you need to remember here is this, that the Ministry of Road and Transport, it is planning on to raise 45,000 crore rupees through monetizing of assets in the financial year of 24, and the target that it is planning to achieve under it, it is planning that 15,000 crore rupees it is going to raise through toll operate transfer. It is a type of PPP, public-private partnership. Okay, it is a type of public-private partnership. Through it, it is expecting to raise 15,000 crore rupees, and through InvITs, it is also expecting to raise 15,000 crore rupees. InvITs, Infrastructure Investment Trust, this also works like a mutual fund only. Here, many investors, money is pulled from various investors and then it is invested in various assets, and in this case, in infrastructure assets, okay? Okay, now let us see what else you need to remember here. So this ministry, the Ministry of Road only, in last financial year, it had raised around 17,000 crore rupees from asset monetization, and this financial year it is planning on putting forward two tranches of InvITs, okay? Okay. So you can see here, this is the main thing that you need to remember. 45,000 crore rupees for financial year 24, two tranches of InvITs. Last year it raised 17,000 crore rupees, and it is planning for financial year 24, it is planning to construct highway of around 12,500 kilometers, and its contribution is expected to reach 1.6 trillion by financial year 25, by financial year 25. And highways, they already constitute 27% of the national monetization pipeline. This is the main thing that you need to remember. Other than that, have an idea, and also have an idea regarding the aim of the national monetization pipeline. Okay. Okay, now let us come to the next news. The next news, that is regarding capital investment, of states. So we already know what is capital investment, any sort of capital investment or expenditure. By that we mean that expenditure is done on creating long-term assets, or even infrastructure. All of this, but it is for long term, creating assets for long term. That is what we mean by capital investment. And the government, that is the central government or government of India, it has approved 56,415 crore rupees to be transferred to 16 states, okay, not all states, but 16 states under the Special Assistance for Capital Investment 23-24. And this money that will be transferred to the state governments, it is supposed to help them with their capital investment, okay. And this capital investment that the states are going to do, it will include sectors of health, education, irrigation, water supply, power, roads, bridges, and railways, okay. So here all of the investments that is going to be done would be considered as capital investment. And what is the amount of capital investment that is being done, or the amount of money that is being shared to the state for their capital investment? It is 56,415 crore rupees to 16 different states. And of the 16 different states, it is Bihar who is getting the highest share. It is getting the highest allocation or highest share of 9,640 crore rupees, And the funds that are being transferred to the state, it will also include share of Jal Jeevan Mission and the Pradhan Mantri Gram Sadak Yojana. Jal Jeevan Mission and Pradhan Mantri Gram Sadak Yojana, okay. Jal Jeevan Mission started in 2019, right? And what is its aim? Under the Ministry of Jal Shakti. And what is its aim? It is to make available clean drinking safe water, okay, by 2024, 55 liters of clean drinking and safe water to every single person in every single household, every single rural household, through household tap water connection, okay, household tap water connection by 24. And the Gram Sadak Yojana, it originally started in 2000, right? For creating Gram Sadak, that is rural roads, and it has already completed 2 phases, phase 1 and phase 2, and currently the third phase is ongoing, which started in 2019, okay. So this would be also included, the funds that are being provided to the states. It would also include the share for the Jal Jeevan Mission and the Pradhan Mantri Gram Sadak Yojana, okay. And Pradhan Mantri Gram Sadak Yojana under Ministry of Rural Development, under Ministry of RD, Rural Development, okay. Okay, now let us go to the next news, but before that, you remember what you need to remember here, the total allocation 56,000 crore to 16 states, and the state with the highest share, that is Bihar, with 9,640 crore rupees. Now let us go to the next news, which is regarding forex reserves. So what is forex reserves? These are foreign exchange reserves. And who manages this foreign exchange reserves? It is managed by RBI in India. It is managed by RBI. And since we are talking about foreign exchange reserves, we can quickly revise what are the components of forex reserves. These are foreign currency assets, then you have gold, then you have SDR, special drawing rights, and reverse tranche position, reverse tranche position. So foreign currency assets, gold and SDR and reverse tranche position, both of these are related to IMF, right? This SDR or special drawing right, you could say it supplements. Okay, it was started by IMF and it supplements the forex reserves of various countries, and reserve transposition is the quota that all countries need to maintain with IMF. All countries have different quotas, okay? So can someone say me that SDR, this SDR or special drawing rights, it is a basket, okay? It is a basket of a few number of currencies. So can someone tell me how many currencies are included under this special drawing rights? And it would be very good if you can also tell me what are the different currencies included under this SDR. So can someone tell? Yes, very good. It is 5 currencies. And can you tell which currencies are included in this? Okay. Yes, very good. It is 5 currencies. And what are included? USD, then you have Euro, you have Japanese yen, then you have Chinese yuan or renminbi, and then you have USD, Euro, yen, then you have pound. Okay, these are the, this SDR, it is a basket of these 5 currencies, okay, very good. So now let us go to the news. So what is the news here? Why we discussed about the foreign exchange reserve? So we already discussed that who maintains or who is responsible for this foreign exchange reserves. It is Reserve Bank of India in India who is going to take care of the foreign exchange reserves. But what the RBI has done is it has given a small amount of its forex reserves to an external asset manager or to external assets manager for managing the same. It is managed by RBI, but what it has done is a small segment or small amount of this forex reserves it has given to external asset manager. Okay, and this is not something permanent in nature or a complete change in strategy with respect to how this forex is going to be managed or who is going to manage this forex reserves. It is simply, you could say, to garner experience regarding how or what is going to happen if the external managers or external asset managers are going to maintain the same. But a very small portion is only, or it has been given to external managers for managing the same, but it is managed by RBI only. Okay, and the governor of RBI has said that there are 3 priorities when it comes to managing the forex reserves. One is safety, liquidity and return. Safety, liquidity and return. And he also said that building forex reserves, it was a conscious strategy to avoid the experience that was faced during taper tantrum in the 2013. Okay, so here we will learn what is this taper tantrum. So in 2008, there was a financial crisis, right? There was a global financial crisis, and because of which there was recession in USA. There was a recessionary condition in USA. And when there is recession or when there was recession in USA, it was important that the country takes enough steps to revive the economy, and that is exactly why it started quantitative easing. And in this, what it did, it started buying bonds. And securities, and by this process it started pumping money into the economy, which was very much required in that point of time to revive the economy from the recessionary condition that it was experiencing. Okay, and after a few years, you could say, when the things started to normalize, the economy started to stabilize, and things started to be under control. The Federal Reserve, just like we have RBI, Reserve Bank of India, that is our Central Bank of India, the USA, it has Federal Reserve, okay, that is the Central Bank of USA, okay. So it started, when the thing started to stabilize, it decided that it is going to withdraw this quantitative easing. And when it was going to withdraw its quantitative easing, it started selling bonds, okay, it started selling bonds. And this selling bonds that it did in 2013, what happened when it started selling bonds, or it started withdrawing its quantitative easing because things were coming under control and were stabilizing, the investors, the various investors, they panicked. They panicked because they felt that since the central bank or the Federal Reserve is withdrawing this quantitative easing, they felt that the economy might collapse and the investments that they have done might become a loss for them. Okay, it might also see a they felt that a very high risk was associated with all the investments they had done, and that is exactly why they started selling bonds. Okay, they started selling bonds. And when they started selling bonds fanatically, every investor or many investors, they started selling bonds. The prices of the bonds decreased. The prices of the bonds decreased, and hence the yield of the bond increased. Okay, in your static part, you must have already learned that bond price is inversely related to the bond yield, right? Price is inversely proportional to the yield. So when the prices started decreasing, the yield started increasing, okay? And this thing or this activity that was done by the investors because of the panic they experienced due to the withdrawal of quantitative easing, this is known as taper tantrum. This is only what is known as taper tantrum, okay? Okay. Now let us go to the next news, which is regarding MSME Day, So whenever you see a day, there are two things that you need to remember. On which day it is celebrated, that is 27 June it is celebrated, and then you also need to remember its theme. You also should remember its theme. So it is not mentioned, the theme is not mentioned here. So can someone tell me what is the theme for MSME Day for 2023? What is the theme for the MSME Day for 2023? Okay, so the theme is MSME for future, MSME for future. MSME for future India at 100. Okay, this is the theme. This is the theme for 2023 MSME Day, which is celebrated on 27th June, and because of this MSME Day only, the MSMEs have come into limelight, right? So let us see some of the data or facts about MSME with respect to what contribution they have towards the economy. So the MSME, it comprises of about more than 63 million enterprises. MSME, that is micro, small and medium enterprises, okay? And what are these micro, small and medium enterprises? You should also be aware of what are these or how these MSMEs are classified. So this is how the MSMEs are classified or identified on the basis of the investments that they are doing and on the basis of annual turnover of them. So micro enterprises, small and medium. Micro enterprises are the ones whose investments is less than a crore, okay? Small between a crore and 10 crore, and medium whose not between 1 crore and 10 crore, and medium is less than 50 crore. Investments are less than 50 crore, less than 1 crore and less than 10 crore. Okay, remember it as 1, 10 and 50, 110 and 50, and this is with respect to investment. This is with respect to investment. And what is the annual turnover on the basis of which this MSMEs are classified? If it is less than, annual turnover is less than 5 crores, then it will be a micro enterprise. If it is less than 50 crores, it will be a small enterprise. And if it is less than 250 crore, if it is less than 250 crore, it will be a medium enterprise. It will be a medium enterprise. Okay. Okay, so you should remember this: 110, 50, 550 and 250. This is on the basis of which classification is done, or this MSMEs are identified. Classification is done or the MSMEs are identified. Okay, it is important. Okay, it is important. So you need to remember this. Now let us go to the news. So let us see the contribution that the MSMEs are doing towards the Indian economy. So here you can see that the MSMEs, they are contributing 30% to India's GDP, 45% to manufacturing, 40% to exports, and they are also providing employment to about 113 million people. Okay, you should remember this data. Alongside that, in your descriptive question or an essay part, you can also mention these values, okay, with respect to the contribution of MSMEs to the Indian economy with respect to GDP, manufacturing, exports, and even employment. And if we compare the MSME, that is micro, small, and medium enterprises, 99%, okay, in fact, more than 99% of the MSMEs are micro sector enterprises. Okay, they are micro sector, that is the smallest form of the MSME. Okay, now let us go to the next news, which is regarding India and Guyana. India and Guyana. So India and Guyana have recently started talks with respect to energy cooperation. Energy cooperation. So they are talking to cooperate in oil and gas sector. So India, it is taking various steps to diversify. It is taking various steps to diversify its energy imports, because it is very important for our energy security. Because if we are completely dependent on one country or a few specific countries for our energy requirement or our energy security, and in case these few countries see some sort of disruption, then our complete energy security would stumble, right? And it would also affect our national security. So it is very important that we diversify from where we are importing this energy sources or energy requirements. So India is currently in talks with Guyana. And where is Guyana? It is in South America, okay, near Venezuela. It is there in South America, and India is currently in talks with Guyana with respect to cooperation in the energy sector. Okay, and this Guyana only, it became one of world's newest oil power sources, okay, after there was discovery of this crude oil reserves in 2015 of more than 11 billion barrels. Okay, more than 11 billion barrels of crude oil reserves was discovered in Guyana in 2015, after which only it became one of world's newest oil power or oil sources. Then we will come to a forecast or you could say a prediction that S&P or Standard & Poor, it is forecasting or it is predicting that India's growth or the GDP growth of India would be at 6%. It would be at 6% in the financial year 24. It would be at 6% in the financial year 24. Okay. That is all you need to remember from this article. And other than that, also another important thing that S&P is saying here is that with this growth rate of 6%, India would be the fastest growing economy in among the Asia Pacific nations. Okay, among the Asia Pacific nations, we are expected to be the fastest growing economy for financial year 24. Okay. Now let us come to the next news. So we have two news today under the regulatory bodies and news. First is an important news regarding RBI. So RBI has come up with a master direction a master direction related to minimum capital requirement for operational risks. Okay, so it has come up with a master direction regarding what is the minimum capital requirement that various banks have to maintain with respect to their operational risk, okay, or to alleviate the operational risk. So first of all, we should know what is this operational risk, right? So any risk of loss, that is arising because of a failure in the operations, you could say a failure or ineffective operations, right? Operations might relate to people, it might relate it to system, it might relate to some sort of external event and also some internal event. It could arise from certain internal event as well, and it also might relate to compliance, any sort of issues with respect to compliance, and this all comes under the operation. And if there is any risk associated because of failure in this operational system of the bank, then there is a risk associated with which is named as operational risk, And to only alleviate this operational risk, RBI, it has come up with a master direction for the minimum capital requirement for the operational risk. So first of all, we should know that to which banks this provision or this master direction is applicable. So it is applicable to all commercial banks except local area banks, payment banks, RRBs, regional rural banks, and SFBs, small finance bank, and all commercial banks except these, it is applicable. This master direction, it is applicable. So now let us come to the main agenda, that is what is being done or what is the minimum capital requirement for the operational risk. So currently, there are many approaches that are in operation with regarding how to calculate this minimum operational risk capital requirement, right? So the RBI, it has said that all of these existing approaches that were used for measuring the operational risk capital, it will be replaced by a new standardized approach, which is the Basel III standardized approach, So this Basel III standardized approach is going to replace all the existing approaches with respect to measuring or calculating the minimum operational risk, okay? And here one thing that you should know, what is this Basel III? So there is a BIS, okay? There is a BIS, and this BIS is Bank of International Settlement, okay? And it basically cooperates between the various the regulatory banks like RBI. It cooperates among various central banks, okay? And it is with regard to maintaining stability in the banking system, and hence the finance and economy of the global economy, not just one, but it is understood that all of the economies are getting related to a very large extent. So it is important that all of these central banks of various countries, they cooperate so that we can maintain the stability in the finance and the economy segment of the global economy, okay? And that is exactly why this BIS was established, and under it 3 Basel agreements were signed, okay? 3 Basel agreements were signed, which is Basel 1, 2 and 3. Basel is a place, okay? It is a place in Switzerland, and there this Basel 3 was signed, and this third Basel 3, it associates with 3 things. One is credit risk, market risk, and operational risk, okay? These 3 things are focused in this Basel 3. In Basel 2 also, all of these 3 segments were focused, but it was enhanced because of the 2008 financial crisis only. This Basel III came up with enhanced requirement to avoid any sort of credit market or operational risk, and it came in 2010. The first Basel 1, it only accounted for the credit risk. It only accounted for the credit risk. But this Basel 2 and 3, they considered three of the risk, that is credit, market and operational risk. Okay. Okay. Now let us see what is this standardized approach. What is this standardized approach which will help us calculate the minimum operational risk capital requirement by various banks. So this standardized approach, it consists of three components. It consists of three components. What are these three components? One is business indicator. Okay, this is with the help of which we are going to find the operational risk. Then we have the business indicator component. We are going to see, okay, that how you are going to find the business indicator. Then is the business indicator component. So when we multiply this business indicator with a coefficient, with a marginal coefficient, then we get the business indicator component. Okay. And we are also going to see what are the marginal coefficients that are going to be multiplied with the business indicator. And then we have the internal loss multiplier. Internal loss multiplier. And this internal loss multiplier, it is found on the basis of average losses, average historical losses that has been experienced by the bank alongside the business indicator component. Okay, so this basically relates to the loss experience historically experienced by the banks. So this standardized approach, it has three components. It has three components. One is business indicator component, and internal loss multiplier. These are the three components of Basel III standardized approach. Basel III standardized approach. Then let us see all of it one by one. So the first is business indicator. The first is business indicator, and how do we find this business indicator? It is a summation of, or it is a sum of the ILDC, that is interest, lease and dividend component. SC is the service component and FC is the financial component. So by adding all of these components, we are going to get the business indicator. We are going to get this business indicator. Okay. And then this also, how to find the ILDC, SC, FC, all of its formula is given here. Just have a look, okay, that what it means. You don't need to go too deep into this, but you need to remember that this business indicator, it is a summation of these all components, ILDC, SC and FC. Then we have the business indicator component. Okay. So with the formula, with the summation of all the components, we found the business indicator. We found the business indicator, right? And this business indicators, it is divided into three different buckets. Okay, three different buckets. One is bucket 1, when the business indicator is less than 8,000 crore rupees. Is less than 8,000 crore rupees. Bucket 3 is when the business indicator is between 8,000 to 2,40,000 crore rupees. Okay, when it is between 8,000 to 2,40,000 crore rupees, then we put it in bucket 2. And when the business indicator is greater than 2,40,000, we put it in bucket 3. And these three buckets, it has a corresponding marginal coefficient. It has a corresponding marginal coefficient, that is 12% for bucket 1, 15% for bucket 2 and 18% for bucket 3. Okay. And by multiplying this BI with the marginal coefficient, we are going to get the business indicator component. We are going to get the business indicator component. And then we have the internal loss multiplier. Okay, this is on the basis of the losses, the historical losses that have been experienced by the bank because of operational risk. Okay, because of operational risk. And here the risk or the losses that has been experienced, it is calculated on the basis of 10 years of data. Okay, 10 years of high quality operational risk and annual loss data. On the basis of that only we are going to calculate. We are going to calculate this internal loss multiplier. Okay, and if the data is not available, okay, if this data is not available for 10 years of losses, then 5 years or above of high quality data, high quality loss data could be used, okay. And this is to find the LC here, okay. There is, in this formula that you see for this ILM, there is LC, that is loss component, okay. And under this formula, to find this LC, we can use the data, or it is required that we use data of last 10 years, or if last 10 years data is not available, then 5 years or more of data can also be used, okay. So you can also have a look over this formula, but I don't think that it is going to come in examination, but you should have an idea here. So by this formula, now we have calculated, or the internal loss multiplier is calculated, okay. And the three components, as we discussed, we already calculated: the business indicator component, and the internal loss multiplier. These are the three components of the standardized approach, Basel III standardized approach. Then we are going to find the operational risk capital, okay. This is basically for which we calculated all of the three components, because the main objective of this complete master direction is to find the operational risk capital that needs to be maintained by various banks. So here, if the banks are in bucket 1, that is, it is less than, the business indicator is less than 8,000 crore rupees, if it is less than 8,000 crore rupees, or it is in bucket 2 and bucket 3, okay, that is more than 8,000 crore rupees, but they do not have 5-year high quality operation risk annual data loss or annual loss data, then what would be their operational risk capital? It will be equal to the BIC, business indicator component, which is business indicator multiplied by the coefficient, the respective coefficient, okay. Bucket 1, 2, 3, they have 3 different coefficients with which it is multiplied, and we can find the operational risk capital through that. And if the banks in bucket 2 and 3, they have 5 years or above of data regarding the losses, then the operational risk capital would be BIC, that is business indicator component, multiplied by the internal loss multiplier, okay. And that is how we are going to find the operational risk capital. And then we have two other things that we'll have to remember here. One is the risk weighted assets. So what will be the risk weighted assets for operational risk? It will be calculated by multiplying 12.5 with the operational risk capital that we have already calculated, or that has been calculated, okay. It will be multiplied by 12.5 to find the risk weighted assets. Then there are two things that could be excluded or could be included when we are calculating this operational risk capital. One is the business indicator items related to acquisitions and mergers. So if there is any sort of acquisition and merger, then before or prior to acquisition and merger, 3 years of data will be included, okay. It will be included while we are calculating the operational risk capital. If any sort of merger and acquisition has been done, the merger and acquisition component of that component, 3 years of data prior to the acquisition or merger that happened, 3 years prior to that, all of the data would be included while we are going to calculate this operational risk capital. And then one other thing which will be included is regarding acquisition and merger only, that operational losses of acquired business or merged entities over 10-year period prior to the acquisition and merger, it would be included when we are going to calculate the losses, okay. The loss component, when we are going to calculate it, this would be included. 10 years of data would be included, okay. Then we have two things that would be excluded or that could be excluded. One is divested activities, that is the parts of business that have been sold, okay, that have been sold it will come under the divested activities. So if there is any sort of divested activities, then it can be excluded, but it has to take an approval from RBI. It has to take an approval from RBI before excluding the divested activities. It has to take the permission of RBI. And similarly, if any sort of losses, any sort of loss data is going to be excluded while calculating this operational risk capital, then also before excluding that loss data, they have to take the approval of RBI. They have to take the approval of RBI. Okay, and this is the master direction of the minimum capital that is required to be maintained for operational risk. Okay, okay. Now let us come to the last news for today, which is regarding the ASBA, that is application supported by blocked amount. So in the primary market, this application supported by blocked amount facility is already available. Okay, you can take for example IPO. It happens in the primary market, right? So here, when the person or any sort of investor, they are placing an order for the shares under the IPO, at that very moment when they're placing an order, the bank, okay, the amount for which they're placing the order, this amount would be blocked in their own bank account, okay, in their own bank account, because someone is not going to directly buy these shares through IPO. They are going to do it through a stock broker, right? They are going to do it through a stock broker. So usually, or what earlier happened was, the money, it was transferred to the stockbroker, and after the allocation, or if any share is allocated to the investor, then the money moved from the stockbroker to the IPO, okay, and the rest was returned to the investor. But here what is happening, the money is not moving to the stockbroker. Instead, in their own account, the investor's own account only, the amount will simply be blocked. That is, you cannot use it for some other purposes, but it still exists in your bank only. And if you are allocated, okay, if this investor is allocated shares, through this IPO, only then the amount required would move to the broker through which this transaction is going to happen, or this share is going to be issued. After, if the share is allocated or issued to the investor, then only the amount will move from the bank account of the investor to the stockbroker. Okay, that is basically what you mean by the application supported by blocked amount, and this is currently available. This facility is currently available only in the primary market, and the SEBI, it is going to introduce a similar approach in the secondary market also. Okay, and it will start it from January 1, 2024. It is going to start the same secondary market, where there is buying and selling of shares. Okay, buying and selling of shares or stocks. It is going to start it in the secondary market. This new facility will be started by SEBI by January 1, 2024. January 1, 2024. Okay. Okay, so this was the last news for today. Now let us see some practice questions. So what would be the answer to the first question here? What would be the answer to this first question here? That which ministry is planning to raise 45,000 crores through monetizing of national highways in financial year 24 through this national monetization pipeline? Yes, the answer to this would be C, that is Ministry of Road Transport and Highways. Ministry of Road Transport and Highways. Then we have the next question, that how much amount did center approve for 16 states for capital investment for financial year 24? How much amount or money was approved? Yes, the answer would be D. The answer would be D, that is 56,415 crore. Okay, 56,415 crore. Now let us go to the next question. That what percentage does MSME contribute to India's GDP? To India's GDP. Yes, the answer would be 30%. The answer would be 30%. Yes. Then let us come to the next question. Let us come to the next question, that is which country India is currently in talks with respect to cooperation in oil and gas sector. Yes, the answer would be A. The answer would be A, that is Guyana. The answer would be A, that is Guyana. Then the last question for the day, that is the forecast. What is the forecast of S&P with respect to India's GDP growth for financial year 24? What would be the answer to this question? Yes, the answer would be 6%. The answer would be 6%. And with this, we come to an end of the session. This was the last question for the day. And with this, we are coming to an end of the session. And we are going to meet again soon to cover more important news from the economy and financial aspects. And I hope all of you have a very good day. Thank you.